What happens if you invest $5 every day for a year? What if I told you that just $5 a day could completely change your financial future? Not $500, not $5,000, just the same amount of money most people spend on a coffee, a snack, or some random thing they forget about 5 minutes later. Because by the end of 1 year, that tiny $5 habit would turn into something much bigger than you might expect. But the real secret isn't the money itself, it's what happens when you give that money time. Because investing isn't about becoming rich overnight, it's about making small decisions today that your future self will thank you for. So today, we're going to see exactly what happens if you invest $5 every single day for a year. And then we'll look at what happens if you keep going for 5, 10, and even 30 years. Because the numbers get crazy. Let's start with the basics. If you invest $5 every single day, you're putting away. $5 times 365 days equals $1,825. So after 1 year, you personally contributed $1,825. Now, depending on what you invest in, your money could grow. For example, let's say you invest in a broad stock market fund that historically has averaged around 7% annually after inflation. Your $1,825 wouldn't just sit there. It would slowly start working for you. You might end the year with around $1,900 or a little more. Now, some people might look at that and say, wait, I only made like $100? And honestly, that's missing the point. The first year of investing is not about becoming rich. The first year is about building the machine. You're creating a habit. You're proving to yourself that you can consistently build wealth. Because the biggest advantage isn't the $5. It's becoming the type of person who invests every day. Most people underestimate small amounts of money. Think about it. A lot of people spend $5 without even noticing. A fast food meal? A subscription they forgot about? A random online purchase. And there's nothing wrong with enjoying your money. But imagine if every day you made one tiny trade with yourself. Instead of spending $5 today, you buy a tiny piece of your future. That $5 becomes a share of a company. That company makes money. That money helps your investment grow. Then your investment starts making money. And eventually, your money starts making money. This is called compound growth. And compound growth is one of the most powerful forces in investing. It's basically your money having children, and then those children having children. At first, it looks slow, but eventually, the growth starts speeding up. Now let's fast forward. You kept investing $5 every day. After 5 years, you've invested. $1,825 times 5 equals $9,125. But because your money has been growing, you could have around $11,000 plus, depending on market performance. Now you've built something most people don't have, a serious financial foundation. And the crazy part? You didn't need a huge salary. You didn't need to be a millionaire. You didn't need to predict the next big stock. You just needed consistency. Because the hardest part about investing isn't finding the perfect investment. The hardest part is actually starting. Now imagine you keep going for 10 years. Your total contributions. $1,825 times 10 equals $18,250. But with compound growth, you could potentially have around $26,000 plus. Now think about that. You turned a simple $5 daily habit into tens of thousands of dollars. And remember, you didn't have to wake up every morning and become a Wall Street expert. You didn't have to watch the market every second. You simply automated the process. You made investing boring. And boring is actually a good thing. Because most wealth is not built through exciting decisions. It's built through consistent ones. Now this is where things get interesting. Let's say someone starts investing $5 a day at age 25 and keeps going until they're 55. That's 30 years. They personally invested. $1,825 times 30 equals $54,750. That might sound like a lot, but with compound growth, that money could potentially grow into around $180,000 plus. And here's the crazy part. A huge portion of that money didn't come from your contributions. It came from time. The earlier you start, the more time your money has to multiply. This is why someone who starts investing small amounts at 20 can sometimes beat someone who starts investing much larger amounts at 40. Time is the cheat code. But the lesson isn't, everyone needs to invest exactly $5 every day. The lesson is this: small actions repeated for a long time can create massive results. Maybe for you, it's $1 a day. Maybe it's $10 a week. Maybe it's $100 a month. The amount matters less than the habit, because the biggest investment you're making isn't just in the market, it's in yourself. You're becoming someone who thinks about the future, someone who pays themselves first, someone who understands that every dollar has a job. So if you invested $5 today, you probably wouldn't notice much. Tomorrow? Probably not either. But after thousands of days, after years of consistency, that tiny decision could become something life-changing. Because wealth isn't usually built with one giant moment. It's built with thousands of small choices. And sometimes, the difference between staying broke and building wealth is just $5 a day. If you enjoyed this video, subscribe for more money stories, investing breakdowns, and financial experiments that show how small decisions can create huge results.